on national insurance contributions. We'll just leave it for a moment just to see if more people arrive from the waiting area. So I'll just give it a few moments for people to join, and then we'll be ready to kick off this afternoon's webinar. Right, a few more people have joined. So good afternoon, everybody, and welcome to this NDNATalk webinar looking at national insurance contributions for nurseries. As you know, this is a rapidly changing area, so we thought it was a good opportunity to have an event like this. Thank you to everyone for joining us. What we're going to do is, in a moment, I will hand over to Tim McLachlan, our CEO, who's going to be the host for this afternoon's event. He'll introduce today's sponsors and the expert speakers for today's session. But just to do a little bit of housekeeping, so to let everybody know, today's webinar is being recorded. It will be made available for members after today's session. There is also an opportunity for you to ask questions to our panelists today. So if you have a question during the presentation that you're about to get, you'll see at the bottom of your screen that there is a Q&A function. So if you put your question into that Q&A box, that will be able to be put to one of our panelists this afternoon. We've also got members from the NDNA team working in the background on today's event as well. So if you're having any issues or you've got anything that you want to put across to the team, you can use the chat function. Again, that should be along the bottom of your screen with the chat bar. So pop that in if you've got any questions for either the NDNA team, and if you want a question asking in the event, please use the Q&A function. So I'll now hand over to Tim, who's going to kick off this afternoon's webinar. Thanks very much.
Thank you, Jonathan, and thank you everyone for joining. This is a real pleasure to share with you another one of our talks and on a hot topic. But these events wouldn't be possible without the support of our sponsors. So we're very grateful to Hope for being our sponsor of this webinar this afternoon. And I'd just like to play a short message from them. Thank you.
Hi, I'm Michelle from Hope. I hope you're all well and looking forward to the knowledge and insight that's about to be shared. I'm sure it will be invaluable. At Hope, we think the job you do is the most important on earth, nurturing, caring for and inspiring our youngest generation. And for that, we want to say thank you and support you all we can. As the NDNA's corporate partner, Hope are delighted to offer fantastic member benefits when you shop with us. Did you know that you get 15% off every order you place with us throughout the year, and also a one-off 20% discount to be used once in the year, perhaps on one of the larger orders so that you make the most of the savings? We understand budgets are tight, so we've put together a list of over 200 essential items with savings of up to 70%, including art and craft essentials, stationery supplies, cleaning, nappies and play sand. And you won't have to wait for your order because we offer you free next day delivery on all orders with no minimum spend. So if you've not signed up already, it's really easy to do. Just go to our website www.hope-education.co.uk/NDNA. Thanks very much for your time.
So we're really grateful to Hope, but we're really grateful to all of you for joining us. Now, I do know your time is very precious, so we hope the timing of this webinar is working for you, and we'll be asking for feedback on what you think of this webinar at the end. But obviously our topic today, national insurance contributions, is a very timely one with the changes that came in April, and there's still so many questions that we know many of you have. So we've got the opportunity for asking questions after the presentation from the experts, and they are Hazlewoods, who I'm going to introduce in just a moment. They're going to be looking at staying compliant, some key things to consider in specific areas, but also how you can maximise the employment allowance, which could save you how much you're spending on the national insurance contributions, bringing it down a bit. So we all like savings, as we saw from what Hope offer there, the 15% to the 20%. Following the update from Carly and Katie, we're going to have an update from Jonathan on policy about the work that we've been doing and how you can be involved in the next stages if you haven't been already. So it's now my privilege to introduce Carly and Katie from Hazlewoods, who will be taking us through the employment law tax changes for nurseries in this current financial year. Thank you, Carly, and thank you, Katie.
Thanks, Tim. Hello, everybody. I'm Carly Wilds. I'm a director here at Hazlewoods, where I lead our children's nursery offering. We act for a whole range of children's nurseries, from owner-managed single setting operators right through to the larger private equity-backed groups. The type of services that we provide would generally are around business structuring, accounts and tax compliance, and corporate finance advice around buying and selling of nursery settings. The firm employs close to 600 staff, so we also have experts in a variety of other areas, including bookkeeping, payroll, and in particular employment taxes, which is where I would like to hand over to my colleague Katie.
Thank you very much, Carly. Good afternoon, everyone. My name is Katie Williams, and I am the Employment Taxes Specialist here at Hazlewoods. Welcome to the webinar about all the things that you never thought you needed to know about employment taxes. Can I have the next slide, please? Perhaps I won't cover everything about employment taxes because I know your time is precious. So actually, we'll just be focusing on these areas. So that's the position on national insurance and national minimum wage for nurseries, how nurseries can be compliant, an update for you on the apprentices and national insurance for them, and then finishing off with some practical tips for nursery managers to approach national insurance throughout the next tax year. Next slide, please. So what is national insurance and national minimum wage? Well, a little bit of a lesson here for you. National insurance was actually introduced back in 1911, and it's a tax which funds services such as the NHS, state pension, and other social security benefits. Apart from a Liz Truss-induced blip a couple of years ago, which we won't mention, the rate of national insurance at 13.8% has been in place since 2011. So it was high time that it was actually going to be attacked for a change. I mean, in 2020, national insurance receipts accounted for 18% of the country's total revenue. So it's a significant earner for the country. National minimum wage, well, that needs no explanation, as it does exactly what it says on the tin. It is there to protect workers against unduly low pay. I don't want this presentation to be all doom and gloom, so we will start off with the hard-hitting facts and figures and then move on to some of the more positive aspects as the webinar progresses. Next slide, please. Oh no, that's the slide. Leave it on that one. Sorry, back. Thank you. The last one of these presentations I did was actually on April Fool's Day. So I did have to reiterate at that point, and I do again, that what I'm saying in this isn't actually a joke, although I can see why some people might have felt that way. You might all be feeling those purse strings pulling a little bit tighter of late, and there are multiple reasons for that, not just general costs of living. We're going to cover those two biggest factors affecting you as employers. The first one being national insurance. So the headline figure was actually a 1.2% increase in the employer's national insurance rate. But the devil here is in the detail. And I don't mind telling you that I let out an audible wince when the Chancellor casually added that there was to be a reduction to the secondary threshold from £9,100 down to £5,000. According to the Office of National Statistics, over a quarter of working population across all sectors, so not just nurseries, are actually part-time. Part-time workers who, if earning £9,100 or less per annum, would not have been incurring national insurance costs for their employers last year. So therefore, the impact on employers of this demographic is significant. In all likelihood, the majority of part-time workers now will be in a position where their employers are having to pay national insurance contributions on their wages. The impact of this threshold change for a former secondary threshold worker, that is somebody at the 9,100 rate, is actually 6.8%. That's equivalent to £615 over the course of the year. For a full-time national minimum wage worker, that is diluted, but it is still an increase of about 3.2% of their wage costs. So let's get all the horrible figures out of the way in one go. National minimum wage increase, you can also see here on this slide. It's a great vote winner from the working population, but it does have little regard really for the impact on employers, such as yourselves. The 2025-26 increases, as you can see from the slide, are significant, with a 6.7% increase for national living wage and even higher rates for the 18 to 20 bracket and apprentice level employees. But in reality, employers felt this last year too, with a 9.8% increase in the over 21 rate. And it was well into double digits again for apprentices in 24-25. So the 25-26 increases that you're all seeing now are compounding those changes. The national minimum wage and NIC change for national living wage group of workers is actually 11.2% when you combine those things together. So that's the reduction in the threshold, the increase in the employer's NIC, and the actual increase to the national minimum wage rate. Over the course of 2 years, added together, that's actually 21%. No wonder business owners are feeling that impact. In an age where there is more government funding on offer for childcare, the squeeze is already on nursery settings, because we all know too well that government funding doesn't actually equate to real cost terms. The Department for Education in December announced that the funding rates for under twos would be increased. I'm sure you're all aware of these, but I believe them to be 3.4% for 2-year-olds, 3.3% for 3 to 4-year-olds. Oh no, sorry, 3.4% for under twos, 3.3% for 2-year-olds, and 4.1% for 3 to 4-year-olds. You don't need a calculator there to see that there is a shortfall in those increase. And settings like nurseries, like your own, incur a significant amount of their costs on staffing, reportedly up to 75% in some cases. Without putting up your fees, these increases this year could be significantly detrimental to any profits. On average, it is reported that nurseries are looking to increase their fees by 10%. So you can take comfort in the fact that you're not going to be the only one doing it. All nursery settings are going to have to look at that. This is an increase which by far outstrips any increase in wages. And ironically, that's in most part due to the fact that employers can't afford to increase their wages due to the NIC increases. Now, was there anything in the autumn budget that was actually helpful to you as employers? I hear you cry. And yes, there was. So you might have noticed on this line, there's a thing that shows employment allowance. This help was somewhat rather unexpected, actually, and it is completely across the board. So not just for those settings that originally claimed it last year. The employment allowance has not only more than doubled from 5,000 to 10,500, but HMRC crucially removed the eligibility criteria, whereby employers' NIC had to be below the £100,000 in order to qualify. So from the 6th of April 2025, all employers could be eligible to claim it. If you are part of a group, though, you have to be careful because there is only one employer's allowance per group. So do be careful of that and do be mindful of that. Previously, groups probably weren't claiming because of that £100,000 limit. So again, it brings those into the group where they can actually make that claim. If you are unsure about whether you might now be eligible for the employment allowance, I implore you to check with your accountants or Carly or myself. Some of you might have been cautious about the employment allowance in previous years anyway, due to the uncertainty surrounding government funding, as the phrase is in the guidance. As that's actually a query that I answer multiple times a year. I'm pleased to say that earlier this year, HMRC guidance has been updated to clarify that nurseries are eligible for this support. So if you are one of the nurseries that erred on the side of caution by not claiming employment allowance, or if you simply weren't aware of it, then you can actually do that now. Speak to your accountant, speak to your payroll advisors, or if you're doing these things yourself, doing your payroll yourself, pick up the phone, more than happy to have a chat through with you about that. Certainly make sure you're looking to claim it going forward and claiming it from April where you can. If you haven't claimed it from the start of the year, though, don't worry. You can. It doesn't preclude you from doing so at any point in the tax year. How do you make that claim? Well, it's as simple as ticking a box on your payroll software. If you haven't done it for previous years, also fairly simple, tick that box in previous years, but you do need to make a submission to HMRC using the earlier year update or full payment submission to HMRC. Otherwise, you won't actually get that money back. So you do need to submit something to HMRC. Next slide, please. Now, let's have a quick look at the impact of those national minimum wage increases for employees working on average a 35-hour week. As you can see on the top row of this, for small settings with 4 employees, the employment allowance changes has worked its magic in terms of mitigating the NIC increase. But as you can see, there is still a 4.9% increase due to the increase in basic wages. For settings with 10 employees, the NIC increase does really start to bite, even with the employment allowance increase. And for settings with 30 employees or more, we are reaching the increase of 9.8%. Add a few more employees into that mix and you'll reach the 11% figure I mentioned at the start of this presentation. Next slide, please. So how can nurseries be compliant? Next slide again. Thank you. My first tip here would be to have a really good relationship with your accountant and payroll provider. They are the font of all knowledge. They are best placed to advise you and ensure that you are compliant with any recent changes and to let you know all of these hints and tips. So do have that a good relationship with them. If you don't go and see them each year, I really would recommend that you do that. You get much more out of a face-to-face meeting than you do over email sometimes. Ensure that your payments are made on time. Now, with PAYE, the more defaults you have that you incur, then the higher the penalties. So make sure that you can get those payments in on time. If you do find yourself approaching the wrong side of a payment deadline, and you know lots of businesses have been there, don't panic. Talk to HMRC. Get on the phone with them. They're not there to cause problems. They are there to try and help you. Get a payment plan in place. Your accountant can't do that for you, so that is something that you do have to do yourself, but you will agree a payment plan with them, and that will ensure that any penalties that would be otherwise incurred are stopped. You will pay late payment interest, but there are no penalties, which is critical, providing you adhere to the terms of the plan agreed. That goes without saying. Allowances, that's another area. So are you claiming for everything that you are entitled to? We've mentioned above about the employment allowance. Check you're claiming that for the current year and or previous years if you haven't done so. Apprentices, that's another one. There are allowances available, there's funding available for apprentices, but more on that in the next section. And finally, the biggest pitfall for businesses stem from, with regards to employment taxes, stem from non-compliance with national minimum wage. The penalties in this area are particularly significant, with up to 200% of the tax levied as a penalty. That's subject to a maximum of £20,000 per worker, but let's hope we don't get anywhere near that. There is also a potentially bigger threat of reputational damage due to the naming and shaming that can occur in the press that goes along with the national minimum wage issue. Common issues surrounding national minimum wage relate to charges for uniforms, mandatory clothing and costs which are incurred by workers, where employers round down shift times. So, you know, if somebody starts 10 minutes early or they have to come in for a debrief 5 minutes before their shift. Unpaid working time, for example, at the start or the end of the day, handover between shifts in the nursery, for example. Ensuring correct rates of national minimum wage and national living wage are applied. So there are annual increases that will always happen in April, so check then. The more difficult one to keep track of is staff birthdays. So where they're reaching those different age categories, so 21, 25, or apprentice or not apprentice, first year, second year. Another area to be mindful of with national minimum wage is salary sacrifice. So you cannot salary sacrifice somebody's wages down below the national minimum wage rate. So do be careful of that if you offer that for things like pension or holidays, etc. And the other thing is deductions from wages. So make sure that any deductions you make are permissible when you're doing the national minimum wage calculations. Otherwise, you can find yourself with an issue there. You may have read in the press a few years back now, actually, about a nursery that had been helping their staff out administratively, and it is purely that. It was an administration thing. So they agreed with their employees to whom this applied that costs they incurred in respect of nursery fees could be deducted directly from their pay to save them, save the employer paying it to them and then the staff member paying it back. A helpful admin task taken off their staff plates, I'm sure you would agree. However, the National Minimum Wage team didn't see it that way. The staff should have received their full net pay and then paid the nursery separately. It's as simple as that. That avoids the National Minimum Wage issue. And as a result of that, the nursery was put on the naming and shaming list for failure to pay National Minimum Wage and found themselves in the position of having to repay funds back to employees who in reality hadn't been underpaid in the first place. So essentially, they probably ended up with a free nursery place, which wasn't the intention of the employer. If you ever do find yourself in the position of not having applied national minimum wage correctly, don't panic. It must be corrected, and it is important to note that actually when you do make these corrections, they must be made at the current rate, not at the rate that was in place when the error occurred. So if you find something that's going back 2 or 3 years, you can't use those more favourable rates. You have to use the one that's in place at the moment. And added to that, you have to make a disclosure to HMRC. And this bit's really important because providing you do that through the correct channels, then I have a handy email from HMRC that guarantees that there will be no penalties and no naming and shaming. So it is worth doing that by the book. And please let me know if you need a copy of my email. I'm more than happy to help you with that one. So next slide, please. Moving on to apprentices and NIC. Apprentices are quite literally the future. And in the nursery industry, where apprentices often come with that youthful vitality and energy that those of us who've been in the workforce for 20 plus years now might find slightly dwindling, they are the lifeblood of your business. Added to their energy and enthusiasm, they come with the added benefit of, for these purposes, of course, of saving on national insurance contributions. And certainly, in certain circumstances, a cheaper national minimum wage rate. As you can see from this slide, an employer engaging an employee under the age of 21 doesn't have to be an apprentice in this situation, but an employee under the age of 21, their earnings up to the top end of the basic rate threshold, which is £50,000, they will not pay any employer's NIC on their earnings. An employer in engaging an apprentice under the age of 20 will also not will not pay any employer's NIC on their earnings up to the same level, £50,270. And in addition to that, in addition to those savings on apprentices, there are the lower rates of national minimum wage, which were noted on one of the earlier slides. Apprentices under the age of 19 can be paid national minimum wage apprentice rate of £7.55. Apprentices over the age of 19 and in their first year of apprenticeship can be paid the same rate of £7.55. Apprentices under the apprentice scheme under the age of 25 will also benefit from no national insurance on no employer's national insurance on their earnings up to £50,270. So apprentices and youthful employees are the way forward for nursery settings, I think. Furthermore, engaging an apprentice employee between the ages of 16 and 18, you can actually receive a bonus payment under the apprenticeship regime of £1,000. That doesn't have to be given to the apprentice. That can be spent by yourselves as employers on anything to do with their employment. So it could just be their salary, but it could also be to help them with travel because they might not be driving at that point, or indeed their uniform. Next slide, please. So there's a few practical tips here on apprentices. Speak to your payroll provider, ensure that the apprentices, or indeed yourselves, if you're doing the payroll yourself, make sure that those apprentices have the right tax code letter, and that is H. That is the really important tax code letter that you are wanting to apply there. Ensure processes are in place for update to the changes in age that we previously mentioned. And then look at making sure you're making the most of apprenticeship training where you're offering training schemes to your employees. Next slide, please. This slide here shows that there are 2 options for those businesses who are required to pay the apprenticeship levy and those who are not. If you're unsure, just check whether your pay bill is more than 3 million. I'm sure most of you will know whether it is or not. Hopefully that's an easy benchmark to assess. If you are in a larger group where you might be paying more than 3 million in payroll, you would be required to pay into the apprenticeship levy, in which case you will already have access to your service account and the funds for apprenticeship will be through there and available to you for spending on training. The government will top up what you can claim. You can claim up to 90%, and the government will top that up with an additional 10% on qualifying spends. For those of you who do not perhaps pay into the apprenticeship levy, which I suspect is probably more don't than do, don't worry, you don't miss out. And actually the government is more generous, and they will fund training up to 95% of the funding band for qualifying training. As an employer, you are expected to fund 5% towards their costs of training, but it is a decent amount of funds to take advantage of. And it is really important, actually, those training opportunities for staff in terms of staff retention. So don't underestimate that. Next slide, please. So we're moving on to some planning points and practical tips for nursery managers to approach national insurance. Limiting workers to hours such that they don't reach the secondary threshold of £5,100 is probably not really the answer for any business due to the number of hours that actually that involves. One of the most frequently asked questions I have had since the October budget is, how can I mitigate against the NIC increase? And when I see the impact of these increases on predominantly high wage cost service sector businesses, I wish there was a quick and significant way to help you all. But in reality, that's not the case. It's these smaller items that you really do need to take advantage of, and just ensuring that you're not increasing your costs inadvertently. So cost savings. This is something that you might wish to speak to Carly about at some point to gauge what other businesses in the sector do and are looking to do. But do look at all areas of your business costs. Can you change suppliers? Should you charge for extras? Consolidate your loans if you have them, and reduce interest charges where at all possible, because of course, obviously, interest rates are fluctuating all the time at the moment as well. Contractors. Now, contractors is a big one, and usually people's go-to when they are looking at saving national insurance. As you may be aware, self-employed people don't incur employers' NIC on their savings by the very nature of being self-employed. Therefore, if you engage a contractor in your business, you are simply paying them their invoice. But do remember, they are an independent contractor. They do not work for you. So contractors might work for certain elements of your business, such as payroll outsourcing, HR outsourcing, maintenance within your setting, but it doesn't work for nursery workers. They are employees, and HM such, you will incur employers' NIC as a result of employing them. You cannot engage with them as a contractor. It simply doesn't fit the criteria. And if you do so, you're going to be opening yourself up to a bigger problem. So please don't see that as a solution that's offered to you down the pub on a Friday evening. But what about agency workers? I know many of you probably engage with agency workers. Well, they are actually generally employees, just not from your business directly. So somebody else is, or rather should be, paying the tax and NIC on the money that's paid to them through their own agency payroll. So don't worry about that. So where are there cost savings to be had? Everyone's business is structured differently. Some of you might have nurseries in areas where cost of living is lower. Some might be in areas where cost of living is higher. Some of you might have senior management teams with higher wage costs, and some of you might be owner managers. All of which have different requirements and considerations. So have a chat with your accountant about remuneration planning. This is mostly for the owner managers of businesses. A shareholder director, for example, can take a combination of dividends and salary, a format which I'm sure many of you are familiar with. Remember, there must be reserves available, though, for you to take dividends. So if your business is currently loss-making, do be mindful of that. It might not be an option. There is also a balance to be had here relating to ensuring that you are paying sufficient national insurance, so don't take everything as dividends, because you do need to have those qualifying years for the purposes of state pension, protecting your state pension, and if you're claiming tax-free childcare. As it says on this slide here, if you are claiming tax-free childcare, you need to have a minimum of £10,159 over the year in salary, and that has to be spread out across the year. So do seek advice on these things, because it is really important to get the help at the appropriate level and make sure that you don't miss out. Now, I touched on this earlier, retention. Retention is really key when other costs are going all over the place. Often there is a high turnover of staff in lower paid roles as well. So what can you offer to your employees to help retain them? That would all help save you in recruitment costs in the long run. So additional training, is there any lifestyle support, flexibility that you can offer to your staff, and or additional benefits? We can help with benefit options and things such as tax efficient benefits for your employees if that's something that you are looking at introducing. One of which ties nicely into salary sacrifice. There's a bit on the slide here about that. This often comes up with regards to national insurance savings, and ordinarily it's a really key area in order to help mitigate that, because what you would do is you're sacrificing your salary, and therefore you aren't paying the employer's NIC on the amount that's been sacrificed, and you're providing them with hopefully an exempt benefit like pension contributions, for example. So there's that saving there of that 13.8%, quite significant, now 15%, quite significant to be had. Often we find that where people do offer these sort of salary sacrifice options, that employers offer to share that saving with their employees to help induce them to do that. As previously discussed, though, you cannot salary sacrifice to take an employee's pay below the national minimum wage rates, so do be careful of that. Furthermore, often with lower paid employees, often cash is what's the most important thing to them. So paying into a pension contribution isn't always what they're looking to do. They're looking to pay September's school uniform costs, aren't they? So that might not always be practical, but it's an option, particularly for your management level staff, for example. There are a few other options under salary sacrifice, but possibly not really that relevant for electric cars, etc. Unless the owner-managed business wants to do, owner-manager wants to do that and partake of an electric car. Please do speak to us. More than happy to share some information on that one. Buying additional leave. That might be a good one to entice your employees, but as we all know, with leave, you then need to have sufficient cover in place. Otherwise, you're going to leave yourself short-staffed, and therefore you can't have the clients in the nursery. So it's not always a win-win situation, that one. And finally, recruitment profile. That is key. Whilst there is no substitute for experience, as noted in the apprentices section, maximising your staffing through apprentice employees could significantly help save you employers' national insurance. But it's not always limited to individuals on an apprenticeship. Don't forget that. So you don't have to take them on under the apprenticeship regime. You can employ employees under 21. Also, nor do armed forces veterans in their first year since leaving the service. So if you have any particularly challenging young clients, perhaps a former staff sergeant that's just left the army might be just what you need. So I think that's getting to the end of our slides now then. So can we move on to the next slide if that's possible? I think, yeah, there that is. So I'll pass back to Carly for a summary of the discussion points that we've just raised here. And then after that, then we'll move on to some questions. Thank you.
Thanks, Katie. Right, so Katie's obviously given everybody an awful lot of information today, so I don't want to go through too much more, but I just thought it would probably be worthwhile just reminding everybody to cover off a couple of points that you can think about, sort of practical things that you can do. One of which is do make the most of your nursery management software. I suspect most of you have some form of nursery management software that you use, so it's just a case of making sure you're using it to the fullest of its abilities, so to make sure that your ratios are on, exactly as they should be, so that you're not overspending on staff costs unnecessarily, which obviously then have the national insurance impact. If you're not sure whether the software you use has this feature, or if you're not sure whether you're using it correctly, then just do get in contact with your software provider, because they should be able to talk you through it, and most of them have got really strong sort of helplines and whatever, so do look into that. You could also consider preparing a cash flow forecast. So obviously this is tips for not necessarily being able to minimize this national insurance, but just what can you do to cope with it. If you prepare a cash flow forecast, you can sort of see where your pinch points are and make sure that your income is coming in at appropriate times compared to when your wages costs are going out, and making sure you've got a bit of a buffer in your cash flow if at all possible, especially with the sort of lumpier payments that you're getting now that so many of your hours are covered by the local authorities. And then the only other point really that I wanted to say was just to reiterate what Katie already said, which is make the most of the allowances that are available to you. So, you know, if there's government funding support that you can get for your apprentices training costs, then make sure you're claiming what you can. Make sure that you're claiming the employment allowance correctly through your payroll, whether that's your payroll provider or whether you're doing it yourself. Just make sure that you've got that box ticked. And make sure that you're using that code H for the younger apprentices, so that you're not paying national insurance unnecessarily. But again, do speak to your payroll provider or your accountant if you're not sure. But I think that's it from us. So if anybody's got any questions, then let us know.
Well, Carly and Katie, thank you so much for that tour de force. Lots of insight there. And we've got some questions coming in for you. Can I just jump to one thing first, and that is to Katie, the slide regarding discounted childcare. Do we want to go back and cover that? Someone said they didn't think it was covered.
Do you want to, should we go back to that one? The workplace nursery exemption.
The question is in our Q&A. I haven't shared it online, but it's just said the slide regarding discounted childcare was not spoken about.
Yeah, so we can, so as nursery settings, one of the key benefits that you could provide to your employees is actually that you could provide them with a free nursery place and or a discounted nursery place. You can't pick and choose. So if you're going to offer a free nursery place, in order for it to be exempt, you need to offer that to all employees across the board. Now, I appreciate that you know that could be quite costly, depending on the demographic of employees that you have in there. So yes, you can offer a free nursery place, and it would be an exempt benefit in kind for them. But probably more realistically is a discounted nursery place, and you can offer to that to your employees without there being any benefit in kind issues for them. As I said, it must be open to all employees, but we've got a cross there against commercially marketed schemes. If you're invited by one of these scheme providers to offer these exempt workplace nursery schemes with them to other employers in the area, do proceed with caution. It's probably going to impact you likely in terms of a reputational position, because actually these marketed schemes don't work unless so there's qualifying criteria for these schemes in order for them to be relevant and to be an exempt workplace. Now you get it because you are a nursery, and you can provide that at your nursery, whereas other employers, for example Hazlewoods, we don't have a nursery on site, and so in order for us to be able to provide exempt nursery places, we would have to partner up with a nursery. That is possible, but we would have to be involved in the financial management of that, of running that business, in order for it to be exempt. So these schemes are not really that viable. So just be mindful if people are asking you to partner with them on that. Do speak to your accountant to see whether what's actually being offered does meet the criteria. Otherwise, you just risk having reputational damage.
Thank you, Katie. Thank you for that one. So I'm really grateful for all the questions that are coming in. Please do add them into the Q&A function at the bottom of your screens. So the first question is, and should we stop sharing the slides and then we see Katie full screen?
Oh, no.
In a moment. So does the H tax code apply to apprentices over 25?
No, it does not, because apprentices over the age of 25 do not benefit from the national insurance savings.
Thank you. Does offering free childcare places to staff save on NI and tax?
Well, that depends on how you're offering them. In reality, no. If you're just offering to your staff a free nursery place, and they're not getting anything they're not sacrificing anything in return, then no, it doesn't, because it's just a nice benefit that you're providing to them. It's great for staff retention because, you know, whilst that's going on, you're not likely to lose that member of staff, you know, and thereafter maybe they feel a sense of loyalty for what you've provided to them. But no, you know, unless you're saving on wages as a result of providing that nursery place, then it's not going to save you national insurance as such. It's just going to be a bit of a morale booster and a good retention point.
Thank you, Katie. The next one is another question about apprentices. It's regarding apprentices. I did not catch the benefit for training payment. Did you mention mitigating?
In terms of mitigating for NIC, there isn't a direct mitigation for NIC. It's purely that you are being able to claim an allowance towards their training costs for apprentices. Although I say there is no mitigation. The apprentices you don't pay the national insurance on the apprentices under the age of 21 or 25 in their first year of training. So there's the national insurance saving there by engaging by employing apprentices, but in terms of their payments for training costs that aren't covered by the apprenticeship levy that you're claiming, then no, there isn't. It doesn't mitigate it against NIC. I mean, sorry, there's so much within the content of this webinar. We have separate elements really. So you've got the NIC issue, then we've got apprentices, which sort of overlaps because there's NIC savings by engaging apprentices, and then we've got the national minimum wage issue. So there's three different elements to it. So apologies if I've overlapped and confused people with that, but you know, there is a saving on apprentices in the sense that you don't pay the national insurance, employers national insurance on that within those criteria on that slide. Does that cover that question?
I feel like mastermind because we've got lots of questions. So if you need to take a drink, please do. The next one is, what about future? Sorry, I know that one's being answered by Jonathan. How does it work in payroll? How does tax and NIC get adjusted?
Do you mean in terms of the rates or the apprenticeship rates that you use in payroll? I don't know if we've got any more information on that particular question. So the payroll software that you use should automatically have all of this information in it, and so more often than not, when we find that there's issues with regards to how much has been charged, it's an input error rather than the software calculation error. So the softwares are generally very, very good, and as long as you're ticking the right boxes and putting the right tax codes in, then it should kick out at the other end the right figure. So I would make sure when you're reviewing your payroll that you have looked at the appropriate letter, the appropriate national insurance letter that you've got on there. So is it an H for where you've got apprentices, qualifying apprentices? There is a whole list of national insurance letters, so I won't go through them all, but I can provide a link to those if anyone's interested. But H is the critical one for the apprentices. Have a look at that. Another one to have a look at is people's tax codes. Now they change throughout the year, and you as an employer won't know the reason behind that change. So it's always worthwhile, if you do get a change from HMRC, letting your employee know beforehand, because it will impact on the net pay position for them. And if their allowances, for example, in their tax code have gone down for whatever reason, nobody likes to get an incorrect pay. People like to get overpaid, but then they don't like to have to pay it back. So, you know, always make sure that you're looking at those things. Make sure that you're ticking the apprenticeship, the employment allowance box to claim that where that's applicable. What else can you check on there? You know, the rest of it is probably basics that you do day in, day out, which is, you know, checking the number of hours that people have done, and that correlates, checking their holiday pay, for example, things like that. The biggest way to upset your employees is to get their pay wrong. So if you are unsure, always worthwhile having a chat to your accountant. If you do your payroll yourself, might even be worth paying for an hour or two with a payroll advisor or somebody from your payroll software provider. They quite often do training sessions, so you can pay for an hour or so with them, and they will sit and make sure that you've got that all set up properly, make sure you've got the pension set up properly, things like that. So those would be my biggest tips for making sure that the payroll and the tax and the NIC are correct on payslips.
Thank you. Thank you. There's been a follow-up on that one, which is talking particularly about the workplace nursery place, making sure it's right for a workplace nursery place.
Yeah, so workplace nurseries, as I said, so if you are a workplace nursery, so if you are providing workplace nursery places for your staff, you have to ensure that it's available to everybody. Otherwise, it's not an exempt benefit, even though you have got that workplace nursery. For anybody else, so if you as a nursery are looking to partner with other businesses under the guise of a workplace nursery scheme, just make sure that that input is relevant and qualifying. I would say 9 times out of 10, it is not. So just be very mindful of that. If you've got people coming to you and they're saying that their employer are using this as a workplace nursery, and it's got nothing to do with you, then I wouldn't worry about it too much, because it's the tax and NIC on them, not on your nursery, that's the issue. The only reason you'd need to be concerned is for your own employees if you are offering a workplace nursery. That doesn't go through the payroll. There isn't a box to tick on the payroll for that. That's just a tax-free benefit that you're offering. Doesn't need to be reported anywhere to HMRC on your payroll. So don't worry about that. Doesn't have to be on the RTI submissions.
Thank you. Just staying with the theme of the workplace nursery, the question is, as a nursery, can we offer childcare to staff as part of their childcare salary sacrifice?
Yes, you can. So they can salary sacrifice some of their wages for for them to pay the nursery. It does get more tricky, because, as I said, you have to be mindful of not reducing them below the national minimum wage rate. So you would have to, under that scheme, you would have to offer it to all your employees to be able to benefit from the salary sacrifice. But those employees that it would reduce below the national minimum wage are prohibited from doing so. What I would say is then that the contract should be between yourself and yourself as an employer, so that you are paying the nursery direct. This sounds very random. And then how that works is then that's deemed to be a benefit in kind for the individual. So they will pay they will pay income tax on that benefit, but they won't pay employees NIC. It's not necessarily a saving for you as employer, because it is still a taxable benefit, unless you're going down the exempt route. So where something is exempt ordinarily, i.e. a free nursery place, but you are charging for it through a salary sacrifice scheme, that brings it back into charge. So it's a very complicated area. So if you are looking to do that, I would definitely speak to your accountants on how to implement that, because there are specific steps that you would need to take.
Thank you. Thank you. Next one is, if discounted places are offered, can there be different discounts for different grades of staff? Yes,
I can. Yep, that's fine. The only time it would become an issue is if you are offering a discount that is bigger, so it takes the cost below what it actually costs you as a provider to provide that place for them. So just be mindful of that. Otherwise, if say, for example, a nursery place costs you 60% of what the normal nursery fees are, you could offer your junior member staff, say, a 15% discount, and that would be absolutely fine. your more senior members of staff or staff who've been there sort of 5 years, 10 years, for example, you could offer them up to 40%, and then it wouldn't have any implications for benefits in kind, providing it doesn't go below that 60%. 60% is just an arbitrary figure I've just made up there, but providing it doesn't go below the amount that it costs you as a provider to have that place.
Thank you. The next one's about staff on 0 hours contracts.
We might be getting into the realms of employment law, but I'll ask away and I'll see if I can answer it.
So it says, how does employer NI work for staff on 0 hours contracts? Do we still pay employer NI for them as usual when they work? Or is there anything different we should be aware of in terms of thresholds, exemptions, or how they're treated on payroll?
Breathe a sigh of relief. I can actually answer that one. It's not an employment law question. So it's purely and simply the hours they incur. You know, how much is that, and therefore you calculate the national insurance on that. There's no, unfortunately, there's no rebates, there's no exemptions, there's no favourable treatment for 0 hours. It is what it is. Whatever the hours they've incurred, you calculate the national insurance on that and pay it accordingly.
Thank you. A couple more, and please keep them coming, folks. We're doing well for time, so please do ask away. The next one is, could you offer 50% discount on a childcare place for a senior member of staff?
You can, you know, you can offer whatever you like, but there might be benefit in kind implications. So, for example, if it actually costs you 60%, and you're offering a 50% discount, then there's a 10% differential there. So that 10% could be then a benefit in kind, and there would be tax implications on that, which you probably don't want to go into. So it's a fine line to tread.
Thank you. Thank you. Now the next one, I think this might come to Jonathan to answer. Jonathan, can I check, are you there?
Hello. No, sorry. It's one that I did want to make sure was got across, because I think there's a couple of questions that are linked to it. But it's the question about not so much nursery uniforms where they have to wear matching polo shirts or jackets or things like that, but where a nursery says you have to wear your own sensible black trousers or sensible and safe black shoes. Can that take people below national minimum wage thresholds?
Sadly, Jonathan, yes, it can. And there's been a couple of cases that have made the press on that. Wagamamas were probably the biggest one that got caught by that. So they actually provided their staff with a Wagamama's t-shirt. But then they stipulated that they had to wear black trousers and black shoes to go with that top. And what they didn't do is they didn't provide for any allowances within the amount that they were paying them. So these employees that were on the national minimum wage, and they've told them that they have to have a pair of black trousers and black shoes. HMRC have said, actually, you're requiring that individual to pay for a certain type of uniform. So had they just stipulated a smart pair of trousers, that would have been fine. But they've stipulated that they've got to wear a pair of black trousers and a pair of black shoes. And so therefore there should have been an adjustment in the amount that they were paid to ensure that they cover it, because it's deemed as a uniform that's a requirement of that employment. And so they were caught by national minimum wage rules. They were named and shamed in the press. I think TGI Fridays have also been caught in a similar way. So you really don't want to go down that route. If you are stipulating that your employees have to wear some form of uniform, and you say provide them with the t-shirt, but they have to wear leggings to go with it, for example, because everyone knows you need to be comfortable and able to crawl around on the nursery floor. So if you're stipulating that they've got to wear black leggings to go with that, you need to make sure that you're making an allowance for that in the amount that you pay them. And it cannot therefore go below national minimum wage rate. So if you think that they've got to pay for 3 pairs of leggings at £15 a go over the course of the year, then their national minimum, the payment should be national minimum wage plus £45 across the year to make sure that that's covered. Otherwise, you'll find yourself in contravention of national minimum wage and on the naughty list.
Great to know. Thank you, Katie. That really brought that one to life. Thank you, Jonathan, for bringing those questions together, because yes, we did have a couple of people asking about that. The next one is, would payroll show a deduction before tax for workplace nursery to offset tax and NI?
So this would be under a salary sacrifice scheme. So it depends on the situation for each setting. So if you're offering a free nursery place, doesn't feature on your payslip at all. If you are offering a salary sacrifice situation, then yes, that would come off your gross pay. But you might find it's come onto a P11D, and therefore you've got the benefit in kind charge on there. So it's all very it depends on the certain circumstances of each setting, really, and how you've implemented that. Do have a chat with your accountant. They are the best place to talk you through what your particular arrangements are for that. Or us, more than happy to answer those questions individually if you've got specific questions on that. But yeah, I mean, your payroll provider is also a good source of that if you have one. You know, our payroll team are all trained on how to deal with these salary sacrifices and how to implement them as well.
Thank you. And upon the screen, I think we can see your contact details. So we're very grateful for you both sharing those so that we could send questions direct to you. I've got a couple more, and that is, firstly, is about, I think it's to do with unpaid leave after holiday entitlement has been used up. So it says, just wanted to clarify something regarding staff who have used up all their paid holiday entitlement and then take additional time off as unpaid leave. Are we allowed to deduct those unpaid days from their gross pay? And would this then reduce our employer NI liability for that period, since the gross earnings are lower?
Purely and simply, yes and yes to both of those questions. So, you know, that's a quite straightforward one to answer.
Great, thank you. And then the final one that I've got that I can see at the moment. So just going to say last chance to ask any questions, folks, if you can put those in the next minute or so. And that is, for anyone who hasn't started to claim the employment allowance, what's the best first steps to do so?
Check whether you're eligible. In all likelihood, you are. And then, as I said, it's purely and simply a tick box on your payroll software. Do you want to claim the employment allowance? And if you haven't claimed it from April, you just tick it now, and it will just adjust for the first month as well. So it's easy to do.
Great, thank you. And just one more question's come through. Can you put a uniform allowance through payroll?
Yes, you absolutely can. My husband has one. He's in the military. He has a uniform allowance that goes on his payslip. So it is a taxable element. So it's unfortunately not a tax-free benefit. So, you know, if you're wanting to save NIC on that, the easiest thing might be to do is go down to Primark and buy some leggings or whatever yourself and do it that way. But yes, you can put a uniform allowance, as with many ransom allowances, like car allowances, for example. It goes through the payroll. It's subject to tax and NIC. So unfortunately, you're not going to save the employer's NIC on that one.
Great. Well, Katie and Carly, that's been absolutely fascinating and really helpful. Thank you for taking all those questions as well. We really appreciate it. I'm now going to suggest that we're going to move on to the second part of our webinar this afternoon, and that's to Jonathan presenting the slides on our policy update. Thank you, Jonathan.
Thank you very much, Tim, and yes, that was a very clearly very interesting and helpful session from Carly and Katie, and lots of questions and lots of great answers to those as well. I have put just for anyone's interest, I've put the details of how you can get in touch with Hazlewoods in the chat as well, if there's any of those points that you want to follow up with them. So that is in the chat there as well. So moving on from the practical to more of the policy, what I just wanted to do is use this to sort of set what NDNA have been doing, but also where we're going next with this for providers. So I think we've already covered in quite a bit of detail the realities of it, but what I just want to focus on at the bottom of this screen is the calculations that we've done for providers across England, Wales, Northern Ireland and Scotland. And what we've honed in on for Scotland is the changes to the real living wage, because we know that for funded childcare offers, that's the requirement. And the only reason why that is lower than in comparison to the national living wage is because the real living wage has been higher for a longer period of time. So the uplifts as a percentage increase have been a little bit lower. And so the national insurance, the knock-on impact of that is that it hasn't been as high. So the combined effect, when we look at both together, we see an 11% increase generally for staff at or around that national living wage level in England, Wales and Northern Ireland, whereas in Scotland we see it as about 9% for those on real living wage. So that's been the basis of some of the briefings that we've done. So what you may have seen, if we go on to the next slide, please, is some of the campaign materials that we've done. And what we've done is we've looked at what this means for the average nursery based on average staffing levels, size of a normal nursery, to give the kind of cash sums. Now, what you will know is obviously what it's been, different from setting to setting. So it might not be that level for yourself. It might be much higher, depending on the number of staff you have, depending on the number of settings you have. But that just helps us to say, for a nursery, this is nearly £50,000 of extra costs in England. Moving ahead, in Scotland, the figures are a little bit lower, but again, across an average nursery comes to about 42,000. And then next slide goes on to Wales, where the smaller number of staff with the higher costs still means at least 23,500 for the average nursery there. So that's been part of our messaging, so that we're really making it clear to decision makers about what the real impact for nurseries have been. So if we go on to the next slide, so this the national insurance changes were announced as part of the budget, and then legislation had to be passed in the UK Parliament to put it into effect. Now, some people might turn around and say, well, you've absolutely no chance of getting any concessions on national insurance. And I've heard that when speaking to MPs, but hot off the press, the Prime Minister's just announced that he is going to do a partial U-turn on the winter fuel payments. So even though things have been done and legislation has been passed to do something, it doesn't mean to say that we're at the end of the fight. So we worked with Scottish Government to try and secure concessions for nurseries and other sectors on NICs. We briefed MPs that it meant that amendments were put forward to the legislation to try and get discounts for nurseries. All of those were unfortunately voted down, but it meant that we got the ball rolling on some other areas. So it has been really crucial to get make MPs aware of that big picture of the impact that it's having across the whole of the UK. We did work with Welsh Government and the Welsh Liberal Democrats to look at the funding rates for this financial year. And again, whilst it won't cover the whole impact of national insurance contributions, it does mean that that those rates will be higher than they originally were planned for. And then in Katie's presentation, she talked about the new guidance from HMRC on how nurseries can confidently claim employment allowance. So if we go on to the next slide, I'll cover that in a little bit more detail. So you may have seen that there was this threshold previously that suggested that if 50% of your income was from public funding, that private businesses would not be eligible for employment allowance. We got MPs to challenge that, to try and make changes to the legislation. And in the debates, the minister responsible said that, yes, it will be up to every organisation to check their eligibility, but they believe that the majority of childcare providers would be able to access it. Now, that wasn't our initial understanding, so we've been working with HMRC, we've been working with external advisors, and we wanted from the minister clarity on the rules, and that update could be shared with nurseries. So that has been done. We have on our website information about the employment allowance, and that links to the official document from HMRC about it that has some case studies. So we essentially understand it to be that as long as you have private arrangements with parents, i.e., you have parent agreements, that technically they can take up their funded childcare wherever they choose. That means that although already in England the majority of places might be publicly funded, and in Wales and Scotland it's heading, it can be heading more in that direction as well. You will still be able to get the employment allowance because technically parents could take that place out anywhere that they want. So although the parents are getting the public funding, they are choosing to take it up with you, and you have a private arrangement with those parents to deliver those places. So the only situations that we can, reasonably foresee, and we do have some members who work like this, is if you are a nursery in, say, a college or a hospital, or another public sector employer, and that public sector employer offers your service to their employees. So you get a contract that says, you will get however many thousands of pounds a year to deliver this service, and the employees of that public sector body will be the ones who benefit from it. Then those are the circumstances where you'll be seen as delivering a public service or a public function for the purposes of that guidance. And what I'll do is I'll make sure that is put into the chat as well, so that you can go and review that yourself. And if you are working with payroll or an accountancy firm, you can just check that their understanding of the guidance is as yours. So we're very happy that clarity has been given, and it's through some of the work that we were doing just to make sure that is absolutely clear for nurseries. So I will just pop that into the chat now, so it's available for anyone to see. So if we go on to the next slide, this is like I say, some of those points about the guidance document. So for example, if you're already getting the employment allowance, you will get it as you go in the future. And then there are examples in that document, as I say, of the sorts of things to think about when considering whether you are performing a function of a public nature. And helpfully, as Katie pointed out, if you haven't already started claiming, there's still time to claim, to put that in and backdate that to the start of this financial year. So that's a really important thing. Generally speaking, this is not an exact science, but we think somewhere around 30 to 35 employees is where you may have hit the threshold previously. So that's the kind of area where you might be have not claimed it in the past, but now eligible because the threshold has been removed. If we move on to the next, so this is where we are now. We're moving into what's next. So yes, the legislation is finalised. Yes, the access to the employment allowance is being confirmed. But we are looking at the comprehensive spending review, which is due in June. So that will set for the next 3 to 4 years the government department's spending powers. So the amount of money in England that DfE has for delivering its funded childcare policy. And what we're saying with that is the current rules around national insurance, both DfE and Scottish and Welsh government said they came as a surprise. They don't have the money to cover it in this year's funding rates. But the principle of funded childcare is that the costs that you incur in delivering it are factored into the funding rates, going forward. So, we're keeping that in mind and working on that for the comprehensive spending review, because that for the next 3 to 4 years, that is now a business as usual cost for you. The national insurance, the part that you now have to pay is not going anywhere. So it is part of the ongoing delivery costs. So we want to see that reflected in the comprehensive spending review, so that the DfE has the right money to include it in the hourly rates. But the comprehensive spending review also affects the budgets that the Scottish and Welsh government have for their own public expenditure. So where public expenditure is increased in departments in England, there is a knock-on consideration for devolved areas. Now, just because more money is spent on childcare in England, increasing that overall amount doesn't mean to say that the Scottish and Welsh governments have to spend it on childcare. But my final point is that we're coming up to elections next year in both the Scottish Parliament and the Welsh Senedd. So there will be pressure from parent groups in those countries to say, hang on, this is available for parents in England. Why is it not available in our country? It's going to be a crucial election issue. And if there's more money being spent publicly in England, then that has to be taken into consideration again, like say for Scotland and Wales. So we're keeping the pressure up, and that brings me on to how you can be involved. So if you go to the next slide, please. So we have a petition, and full disclosure, this was launched by a member in December with our support. The hope was that it would be live in time for the debates about the legislation itself. However, due to the problems that Parliament was having in December around the petition's website, that did not actually launch until well into, I believe, February, maybe into March. So we're a little behind where we wanted to be in terms of the number of signatures, but it's still important, and it comes back to that point that I was making about the comprehensive spending review. We want to show the level of support in this country. We know from Pregnant Then Screwed that over 90% of parents support nurseries being exempt from NI contributions because they know how hard your staff work, they know how tight your margins are. So parents back it. Obviously, nurseries are providing a crucial element of the financial infrastructure and social infrastructure for the country as well. So it's in everybody's interest that nurseries are supported in this way. So that's why we need to get as many people signing this petition as we can. So whether it's staff members, whether it's parents in your nursery, yourselves, it helps to show the level of support in the country, so that it helps us in making that case for the comprehensive spending review and the debates that will then follow for Scotland and Wales, as well as the negotiations that DfE have to do on their annual budget. So that's why we're still pursuing the petitions, because it still can have a big impact for us. If you just go to the next slide, please. And here's where I want to sort of try and inject a little local rivalry into this. So we've got some real hotspots where there's loads of signatures for the petition in Rochester, Neath in South Wales, Lancaster and Edinburgh in Scotland. But we've got areas where nobody has signed the petition, whether that's in Blaenau Gwent, in Durham, Southampton and Belfast. So there's parts of the country in grey there where nobody has yet signed the petition. And so the MPs in this area don't know the strength of feeling. So if an MP knows that hundreds of people have signed in their constituency, they have to sit up and pay attention. And remember, this is a UK-wide issue, so it is your member of parliament. It's not an MSP, it's not a Senate member. It's the MPs that count for this. So my plea as part of that is, please, if you're in one of those areas that's not represented yet, do sign it, share it. If you know local nurseries, encourage them to sign it, and also encourage your parents and your staff, because making sure that national insurance contributions costs are either discounted from nurseries or taken into account into funding decisions are going to be crucial, because that's thousands of pounds that will be that people will be losing out on. And we know that the opportunities for generating that are very, very limited, and it will be a real concern for people's sustainabilities. I don't need to harp on about the potential negatives. So this is about how you can be involved to have your voice heard on this. So if we go on from there, I think that's my last part of this. So I'll hand over to Tim for just a last couple of announcements from NDNA, and I will finish on a very clear plea of, please add your voice to our voice. We can put the statistics, we can work with stakeholders and with economists and researchers to show the reality for individual nurseries, to show the national picture, but we also need that pressure from the grassroots up as well to make that case. So please do sign the petition, and the link is in the chat as well. Thank you.
Thank you, Jonathan. Indeed. So please look in the chat and click on the petition. It will ask you to confirm your email. So you click on it and then you get an email to your email address to then fully sign the petition. So it's a two-stage process, as it is for any government petition, but please take a copy of that and share it with your entire organization, your staff, your employees, even your parents. So it would be great to get as many signatures as we can, especially to increase hotspots to be everywhere, as Jonathan outlined. So I'd like to just wrap up before saying our final thank yous with 3 pieces of news for you, and that is, thank you, Rose. Firstly, on the Institute of Early Years Education, we've been very mindful about how to support the sector in these tough times, and we know that many providers are struggling with increased costs. And one of our goals of the Early Years of Education Institute has been to enhance the professional reputation of the workforce. Now, we know that we need to get access to good quality CPD and also to track that progress. And so from this month, NDNA are offering the Institute for free. So you can now join the Institute for free. We wanted to make sure we were easing the pressure on the sector while increasing that professional reputation. So now the universal access is open and free to everyone to the Institute. And thank you to Rose, who's just posted the link in the chat, and you can see it on the slide there. So you can go and join for free now. And that gives you the access to tracking the CPD as an actual function for each of your members of your team. So please join the Institute and you get the CPD tracker for each of your employees. Definitely worth doing. Please share that with your team. We'd really like to see the numbers keep increasing, ever bigger as the people that are joining the Institute. Secondly, our conference. We're looking forward to seeing many of you at our conference in Liverpool in only a couple of weeks. There are the last chance to buy some tickets, so please do book now. It's a great opportunity to network face to face, to share experiences and to meet and support each other. It's open to all managers, owners, and practitioners. We've got our practice work stream has moved online for this year. So this is very much focused on managers, owners, and practitioners. And we've got a great lineup of speakers, opportunities to be informed, inspired, and we've got a really good exhibition this year. And that's one thing that we've got new for this year is our first ever virtual practice stream. So that's online accessible and practical for your practitioners everywhere. So please go and have a look at our conference. Again, the link has been put in the chat. So if you want to click on that or take a copy of that to come back to, that would be great. And then these events are very much about keeping you informed and getting the expert advice you need. And one that's coming up next week that we want to make sure you're aware of is about biting. So bite-sized solutions, how to respond to biting behaviours. Please book on that now. It's free to NDNA members, and we're going to put the link in the chat. There, you can see it there. So again, please copy and paste that and book onto that. Another free talk that's going really right to the heart of an issue that's been raised to us that we know affects many of our members, and we want to make sure that that's available for you. So that's happening on the 28th next week. So finally, it's my job to say a great big thank you to Carly and to Katie from Hazlewoods for being our experts on the national insurance contributions this afternoon. I want to make sure that we have future topics that are going to be of interest to you. So we'd really like you to enter in the chat any suggestions that you have for future topics to keep them relevant, keep them applied, and keep them nice and succinct, as I hope you feel we've done that for you this afternoon. And the final thing is, please let us know what you think. So there's going to be a poll that's going to pop up on your screens, and that is, has this event made you feel more informed? Simple yes, no. It would be really great if you can just vote, click either one. That really helps us make sure that what we're delivering for you, our members and our guests, is exactly what you need. So I'll let that just for a couple of moments to make sure everyone has a chance to click. And then please can I just say once more, please go back in the chat, copy those links down, recognise that you'll have many things you probably need to get on with now, but we're going to finish a few minutes ahead of time. And if you could click on those links, you can book on for the webinar next week, you can sign the petition, and indeed you can give us your thoughts in the chat on any future topics. So from me, from Jonathan, from everyone at NDNA, thank you to Carly, thank you to Katie, and thank you to all of you for joining us this afternoon. Thank you.